All right, welcome back, folks. We are a business show, and we're going to talk briefly about the jobs report. Top-line jobs looked okay, 216,000, but less the downward revision, only 145,000. Unfortunately, job gains in government, health, social assistance, leisure, manufacturing has not moved in a year. Manufacturing hours worked continue their decline. In effect, the U.S. economy has stopped producing goods. Meanwhile, the other survey, the Small Business Household Survey, well, that thing cratered almost 700,000. Second big drop in the last 3 months. Even worse, 667,000 people dropped out of the labor force altogether, so participation rates fell. Temporary workers fell for the 11th straight month. Plus, the ISM Services report had a big drop. And that followed the 16th straight decline of ISM manufacturing. Okay, production wages up over 4%. That did beat inflation, but you still got yourself lower weekly earnings. Typical families having trouble making ends meet. So let us bring in Mr. Wonderful, the great Kevin O'Leary, chairman of O'Leary Ventures, Shark Tank investor, author of Cold Hard Truth on Business, Money, and Life. Kevin O'Leary, welcome. I love to have you on these days. One thing, it's an odd thing, markets think the Fed is going to cut interest rates like crazy. I would venture to say, even though this is not a fabulous report, that there aren't going to be any Fed rate cuts no time soon. And market could retreat on that. What says Kevin O'Leary?
Well, you gave a shopping list of data that tells me that the March cut isn't going to happen. And I'll tell you why, basically. Everybody's trying to divine what the Fed's going to do. The market would love to see the Fed do a series of cuts, even starting in the first quarter. But unfortunately, the number that really matters is inflation still sticking at 4.1%. Now, you can debate how that inflation number is actually calculated, but the Fed's mandate is 2%. It's not 3%, it's not 3.5%, it's not 2.5%, it's 2%. And so the idea that they would sit up there at 4.1, even with all the data you talked about, and actually do any kind of a cut in March, I think is a dream. It's just a fairy tale at this point. So the market's starting to digest today, and you've seen a series of trading days in this new year that have been negative for the market as it tries to digest the fact that the Fed won't be cutting as fast as anybody thinks. And also, the data, as you gave it, shows that the probability of a soft landing remains at least 50-50. This economy, buoyed by the consumer, remains buoyant. Now, the one number that concerns me more than any is household small business. That was a bad number, Larry. Sorry about that one.
Right. No, that's right. And I put that, look, I've been looking at these numbers for a long time. The household survey, which is predominantly smaller businesses, that's what forms the unemployment rate and a number of very important benchmark issues for labor market strength. It looks weak. But I think your other point, I think the Fed will be paralyzed, Kevin. In other words, at the end of last year, you had this huge rally. You know, I'm glad Kudlow indexes went up. The Kudlow Trust went up. Everybody was bullish and happy, and that's good. But 7 rate cuts were priced in to the market, according to some futures markets. And I think that was nuts. And I think that that is a warning. I'm not saying the economy is collapsing. I agree with you, soft landing, 50-50, that kind of thing. But all these rate cuts, I don't know. I think people are way ahead of themselves.
No, you're right. Now, but clearly what we have to worry about now is what we've talked about in the past. Small business represents 60% of job creation. The cracks are showing there first, primarily the cost of capital of small business as provided to them by regional banks, which are kind of stuck right now waiting for new policy on liquidity. So the loan books are very tight. Now, I don't know if you're aware of this, Larry, but I'll be going there on Jan 18th. There will be hearings in Washington specifically to deal with small business in America on a whole wide range of topics. One of the ones that's concerning me is the next round of support from the federal government is all going to the S&P 500 and 2 giant acts, the CHIPS and Science Act, and, of course, the Inflation Reduction Act. I don't find a lot of money in there. There's about $2 trillion, but I see none for small business, and I'm going to be educated on January 18th. I will be meeting with the Secretary of Commerce. I'll be reporting back to you on this. She promises me there's $9 billion in the Science and Chip Act for small business, and I'm saying show me the money, because I am small business. I deal with small business every day, and we're not feeling too good right now.
I love you on small business, Kevin. I love you in general, as you know. But I don't love you on more government subsidies. I don't love you on picking winners and losers. Now, I know the administration has, spent $6 billion in 3 years, and there's all kinds of green energy subsidies and chip subsidies and this and that. I just don't think that's the way to make America great. I mean, I think small business, for example, would like a easing of the $3 trillion of regulations and paperwork that they're suffering from. Now, that would be something. Unfortunately, this administration, they're regulators. And I think if you go down there, you should say, wake up and undo something. Deregulate. I'm Kevin O'Leary, the king of deregulation.
Well, Larry, I agree with that. I'd rather have better policy on regulation than anything else. However, the CHIPS Act and the Inflation Reduction Act, that is now law. And I'm putting up my hand for small business saying, I want 6%. Basically, I want 6 cents out of every dime or 60 cents out of every dollar, because I represent 6 out of 10 jobs. And so listen, if the money's coming, it's coming out of a helicopter. I didn't say I liked it. I said I know it's coming. So I'm on the ground looking up at the sky saying, where's my 60%? If I'm 60% of job creation and you gave it all to the S&P 500, how did you help America? You just took it away from the people that actually are the backbone of this country, and you gave it all to the big guys who don't have any trouble raising money. That's my beef, Larry. That's why I'm going to Washington. Somebody's got to ring the bell for the small guy. That's me.
Good luck, Kevin. Wish you a lot of luck on that. You know what? I know politically it's always better to giveth than to taketh away. But I would argue, if you want to help somebody, instead of spending more, how about cutting taxes? I got to get out of here.